All right, so you ready to take a deep dive into Unilever's 2023 annual report?
Absolutely. I'm really curious to see how they navigated this past year, especially with all the global economic challenges and the growing focus on sustainability.
Yeah, it seems like every company is talking about sustainability these days, but Unilever's been at it for a while now, haven't they?
Yeah, they have. They've been integrating sustainability into their business strategy for quite some time now. But the question is, how is that actually translating into their financial performance and what are they doing to create value for shareholders?
Well, that's what we're here to find out. We've got their annual report, the financial statements, and all the juicy details ready to go.
Perfect. Let's dive in.
Okay, so first things first, let's take a look at their business segments. It looks like they've reorganized into five distinct groups now: beauty and well-being, personal care, home care, nutrition, and ice cream.
Yeah, it's a pretty diverse portfolio, isn't it?
It really is. It just shows how broadly Unilever operates across the consumer goods market. So, what do you think? Should we tackle these segments one by one and see what kind of trends and challenges they're seeing in each area?
Sounds like a plan to me.
All right, let's start with beauty and well-being. What are some of the key highlights there?
Well, one thing that jumps out is the strong emphasis on sustainability. They're talking a lot about plant-based products, sustainable packaging, and things like refillable deodorant sticks.
Yeah, I saw that they're even making their Dove soap bars with recyclable packaging now.
Right. It seems like consumers are really driving this shift towards more eco-conscious products,
hmm
and Unilever is clearly responding to that demand.
But it can't all be smooth sailing, right?
Yeah.
I'm sure there's some challenges in this segment as well.
Oh, definitely. The report mentions rising input costs for raw materials and packaging, which, with all the supply chain disruptions we've seen lately, that's not surprising. But it does put pressure on profit margins.
Yeah, it's a delicate balancing act, isn't it? Trying to be sustainable while also maintaining profitability. Okay, so what about personal care? What's happening in that segment?
Well, it seems like they're really focused on meeting the needs of a diverse and evolving consumer base. They're leveraging technology to tailor products to specific markets, like that personalized skincare platform they've developed in China.
Oh, yeah, I read about that. It's pretty cool how they're using technology to enhance the customer experience.
Right. It's not just about efficiency anymore. It's about personalization and really understanding the needs of individual consumers.
Okay, moving on to home care. Are they seeing similar trends there in terms of sustainability and technology?
Absolutely. Sustainability is a major focus in home care as well. They're innovating with concentrated laundry detergents that require less packaging and water, and they're seeing strong growth in their plant-based cleaning products like the seventh generation brand.
I've actually tried some of those seventh generation products. They're not bad at all.
Yeah, they're pretty good. It seems like consumers are becoming more open to natural alternatives, and Unilever's definitely capitalizing on that trend.
Makes sense. Okay, so let's move on to nutrition. This is a big one for Unilever, right?
Yeah, nutrition is a complex landscape these days. There's growing demand for healthier and more sustainable food options. And Unilever's responding by expanding their plant-based offerings, like the Vegetarian Butcher and Hellman's Vegan Mayonnaise.
I've actually tried that vegan mayo, and I got to say, it's pretty impressive. You can barely tell the difference.
Right. They're really upping their game in the plant-based food space.
Now, of course, we can't forget about ice cream. Who doesn't love a good scoop on a hot day? What's Unilever's strategy in that segment?
Well, they're definitely leaning into the indulgence factor. They're focusing on premiumization with brands like Magnum and Ben& and Jerry's leading the way. They're also introducing new formats and flavors to keep things exciting.
Yeah, they're really good at keeping their finger on the pulse of consumer trends, aren't they? It seems like they have a solid growth strategy in place across all their business segments.
They do, and a key part of that strategy is their focus on what they call their power brands. These are their top 30 brands that generate significant revenue and have strong growth potential. They're investing heavily in innovation and marketing for these brands to maintain their market leadership.
Makes sense. So they're playing to their strengths. Now let's talk numbers. How did all these strategies translate into financial performance in 2023?
All right, let's take a look. Flipping to their income statement, it says here that Unilever reported underlying sales growth of 8.5% for the year.
8.5%. Wow, that's pretty impressive considering the challenging global economic environment.
Yeah, it's not too shabby at all. And it looks like this growth was driven by a combination of factors.
Such as? Fill me in.
Well, price increases contributed to some of the growth as they had to pass on some of those rising input costs we talked about earlier. But they also saw volume growth, which means they were selling more products overall.
So even with inflation and economic uncertainty, people are still buying their products. That's a good sign.
Yeah.
What about their profitability, though? What does their income statement say about that?
Their operating profit for the year was 9.758 billion.
Okay, that's a big number, but what does it actually tell us? Was that a good year for them, profit-wise?
Well, it's important to dig a little deeper and look at the factors that influenced that figure. They had some gains from disposals, like the sale of the Suave business in North America.
Okay, so that boosted their profit, but it's a one-time thing, right?
Right. And on the flip side, they also incurred some restructuring costs as they continue to streamline their operations. So it's not quite as straightforward as just looking at the headline profit number.
Gotcha. So we need to look beyond the surface and really understand the underlying trends. What other key metrics should we be paying attention to get a better sense of their financial health?
Well, the balance sheet is a great place to start. It gives us a snapshot of their assets, liabilities, and equity at a specific point in time. And one key metric to look at there is their debt levels.
Debt, huh? Aren't they carrying a lot of debt?
They do have a significant amount of debt, yeah, but it's manageable relative to their size and earnings. They also have a strong cash position, which gives them some flexibility.
Flexibility for what?
Well, to invest in growth opportunities, pay dividends, and handle any unexpected challenges that might pop up.
So a strong cash position is always a good thing.
Yeah.
What about their cash flow statement? What insights can we get from that?
The cash flow statement is all about how cash is flowing in and out of the business. And one important metric here is free cash flow.
I hear that term thrown around a lot, but I'm not really sure I understand what it means. Can you explain it to me like I'm five?
Okay, imagine you have a lemonade stand, right? You sell lemonade, you make money, but you also have to pay for the lemons, the sugar, the cups, and maybe even a little rent for your stand.
Okay, I'm following.
So the money you have left over after paying for all those expenses, that's your free cash flow. It's the cash you have available to reinvest in your business, buy more lemons, or even just put in your piggy bank.
So in Unilever's case, their free cash flow is the money they have left over after paying for all their operating expenses and capital expenditures.
Precisely. And in 2023, they generated 6.2 billion in free cash flow, which is a healthy number. It shows they're managing their operations efficiently and generating cash to support their growth and shareholder return strategies.
Speaking of shareholder returns, let's talk about that next. They mentioned dividends and share buybacks in the report. Can you give us a rundown on those?
Sure. So Unilever has a long history of returning value to shareholders. And in 2023, they paid out a total of 6.1 billion through dividends and share buybacks.
Okay, let's break that down. What was the dividend per share for 2023?
It was 1.864 per share.
All right, and what about the share buybacks? How do those work, and why would a company choose to do that?
Share buybacks are when a company repurchases its own shares from the market. This reduces the number of outstanding shares, which can increase the earnings per share and potentially boost the share price.
So it's like they're shrinking the pie, but everyone gets a bigger slice.
Mm-hmm.
Interesting. But why would they do that instead of reinvesting that money back into the business?
It can be a strategic move when a company believes its shares are undervalued. It can also be a way to return cash to shareholders in a tax-efficient manner.
Gotcha. So it's all about optimizing their capital allocation and maximizing shareholder value. Makes sense.
It's like they're saying, hey, we think our stock is worth more than the market is giving us credit for.
Right, right. Okay, well, let's shift gears a bit and talk about something that's becoming increasingly important for investors, and that's sustainability. Unilever's annual report does mention climate risks, doesn't it?
It does, yeah. They acknowledge that climate change presents both risks and opportunities for their business.
Okay, so let's break that down a little bit. What kind of risks are they talking about?
Well, they're concerned about things like extreme weather events disrupting their supply chains.
Oh, yeah, that makes sense. Like hurricanes or droughts could impact their ability to get raw materials or transport finished goods.
Exactly. And then there's the risk of stricter environmental regulations, which could increase their costs. And of course, they're also worried about shifting consumer preferences towards more sustainable products.
So they're really looking at the whole picture from the environment to regulations to consumer behavior.
Yeah.
It's not just about the immediate impact on their bottom line.
Right, they're taking a long-term view. And they've actually conducted some pretty detailed scenario analyses to assess the potential financial impacts of a 1.5 degrees temperature increase.
Wow, that's pretty forward thinking. And what did those analyses show?
Well, they looked at two different pathways. A proactive pathway, where they take aggressive steps to reduce emissions and adapt to climate change. And a reactive pathway, where they basically wait and see how things unfold.
And I'm guessing the proactive pathway is the preferred one, both for the planet and for their business.
You got it. Their analysis shows that the proactive pathway, even though it requires more upfront investment, actually leads to better long-term financial outcomes. It helps them mitigate risks, build resilience, and tap into new market opportunities.
So they're not just doing this for good PR. They're actually seeing a real business case for sustainability.
Exactly. They're seeing it as a way to create value for both shareholders and for society as a whole.
So how are they actually putting this proactive approach into practice? What are some of the concrete actions they're taking?
Well, they've set some pretty ambitious targets for things like renewable energy. They want to be using 100% renewable energy across their operations by a certain date.
Okay, and what about their supply chains? Are they doing anything to address deforestation and other environmental concerns in their supply chains?
They are, yeah. They're working to ensure that all of their agricultural raw materials are sustainably sourced. And they're also committed to using more recycled plastic in their packaging.
It sounds like they're really trying to walk the walk when it comes to sustainability. But, I did notice something in the report that I found a little bit puzzling. They mentioned that emissions from consumer use of their products actually increased in 2023. How do they explain that?
Yeah, that is a bit counterintuitive, isn't it? But they do provide some context for that increase.
Okay, I'm all ears. What's the explanation?
Well, firstly, they saw significant product volume growth in North America, which naturally leads to higher emissions, right? If they're selling more products, more people are using those products, which generates more emissions.
Right, that makes sense.
And then secondly, they had to adjust the propellant system in their dry shampoo products to comply with new VOC regulations in the US. And unfortunately, that change actually resulted in higher emissions for that specific product category.
Oh, wow. So sometimes, even when you're trying to do the right thing, there can be unintended consequences.
Yeah, it's a complex issue for sure. But overall, I think it's fair to say that Unilever is making a genuine effort to reduce their environmental impact.
I'd agree with that. They're clearly not perfect, but they're trying. And they're being transparent about the areas where they still have work to do, which I think is important. Now, all of this is great from a sustainability perspective, but at the end of the day, investors want to know how this is going to impact their returns. How does Unilever's commitment to sustainability translate into creating shareholder value?
That's the million-dollar question, isn't it? And to their credit, Unilever actually addresses this head-on in their report. They argue that sustainability is not just the right thing to do, it's also good for business. By reducing their environmental footprint, they can lower their costs, mitigate risks, and tap into new market opportunities.
So it's not a zero-sum game. They can do good for the planet and good for their shareholders at the same time.
Exactly. They see sustainability as a key driver of long-term value creation, and many investors are starting to see it that way as well.
Okay, so before we wrap up this part of our deep dive, there's one more topic I want to touch on, and that's executive compensation. The report mentions performance-based incentives for their executives. Can you elaborate on that a little bit?
Sure. So Unilever's executive compensation is structured in a way that ties their pay to the company's performance. If the company does well, the executives are rewarded. If the company underperforms, their pay can be impacted.
So it's all about accountability and making sure everyone's rowing in the same direction. Did the report mention anything about shareholder feedback on this remuneration policy?
It did, yeah. They've been engaging with shareholders and proxy advisors on this topic and have taken feedback into account when designing their compensation policies. They're committed to transparency and responsiveness to shareholder concerns.
That's good to hear. It shows they're taking corporate governance seriously. Okay, so we've covered a lot of ground in this deep dive. We've talked about Unilever's business segments, financial performance, sustainability initiatives, shareholder return strategies, and even their approach to executive compensation. Phew, I'm exhausted.
Me too. But we're not quite done yet. There's still more to unpack.
You're right. We still need to talk about Unilever's plans for the future. What's their outlook, and what are some of the key things we should be watching for in the coming years?
Yeah, that's the big question, isn't it? What does the future hold for Unilever? But you know what? I think maybe we should save that for the final part of our deep dive.
You're right. We've given our listeners a lot to digest already. Let's take a pause here, give everyone a chance to catch their breath, and then we'll come back for a final wrap-up where we'll assess Unilever's prospects moving forward. Okay, so we're back for the final part of our deep dive into Unilever's 2023 annual report, and we've covered a lot of ground already. You know, their business segments, their financial performance, their sustainability efforts, and even their approach to executive compensation. But now I think it's time to look ahead and kind of try to answer the big question. What does the future hold for Unilever?
Yeah, it's a big one, isn't it? I mean, they're clearly navigating a complex landscape. There's the global economic uncertainty, there's the ever-evolving consumer demands, and of course the ongoing challenge of climate change.
Yeah, there's no shortage of challenges out there, that's for sure. But you know, they also seem to have a lot going for them, don't they?
Sure. Oh, absolutely. I mean, you just have to look at their brand portfolio, right? I mean, these are household names, from Dove soap to Ben and Jerry's ice cream. They have products in just about every category imaginable, and that global reach is something that very few companies can match.
Yeah, that's true. I mean, they're truly a global giant. But you know, beyond just brand recognition, they also seem to have this this willingness to adapt and innovate, right? We talked about their agile innovation hubs and their push into plant-based products. They don't seem afraid to experiment and try new things to meet the changing needs of consumers.
Yeah, I think that's a key strength for them. They're not just resting on their laurels. They're constantly evolving and trying to stay ahead of the curve.
And it's not just about coming up with new ideas, it's about executing on those ideas effectively, right? And that's where their focus on their top 30 power brands comes in. By concentrating their resources on these key brands, they can drive growth and efficiency.
Right, exactly. It's a smart strategy.
Okay, so we've talked about their strengths, but what about the external factors? We talked about the global economic headwinds, inflation, supply chain disruptions, geopolitical tensions. How do you think those are going to impact Unilever moving forward?
Well, it's definitely something to keep an eye on, right? I mean, those are real challenges that could have a significant impact on their business.
Yeah, but I don't know, I get the sense that they're pretty well equipped to handle those
I
challenges.
think so too. I mean, they've been around for a long time. They have a diverse geographic footprint, which helps to mitigate risk, and they've proven their ability to adjust pricing and manage costs effectively.
Right, so they're not immune to those pressures, but they're not exactly sitting ducks either.
Exactly. And then, of course, there's their commitment to sustainability, which, it goes beyond just being a good corporate citizen. It's becoming increasingly important for attracting and retaining both customers and talent.
Yeah, it's like sustainability is becoming a core part of their brand identity.
Right. And they're backing that up with real action, from reducing their environmental footprint to promoting ethical sourcing. It's something that resonates with today's consumers, especially younger generations.
So it sounds like you're cautiously optimistic about Unilever's future. They face some real challenges, but they also have the strengths and strategies to overcome those challenges.
Yeah, I think that's a fair assessment. I'd say they're well positioned for long-term success, but it will be interesting to see how they navigate the complexities of the coming years and how their choices impact both their bottom line and their role in the world.
Well said. And I think that's a great note to end on. Unilever's journey is a reminder that business can be a force for good and that creating value for shareholders and for society as a whole doesn't have to be mutually exclusive.
Couldn't agree more. It's about finding that balance between profit and purpose, and I think Unilever is making some real strides in that direction.
Absolutely. Well, hey, thanks for joining me on this deep dive. It's been a fascinating exploration of a company that really touches all of our lives in so many ways.
My pleasure. It's always great to chat with you about these things.
And to all of our listeners out there, we hope this deep dive has given you a better understanding of Unilever's business, their strategies, and the factors that will shape their future. Until next time, keep exploring, keep learning, and keep diving deep.